Imagine waking up every single morning, going to work full-time, doing everything society told you to do, and still feeling like you're financially drowning. That is now the reality for millions of Americans. People are working harder than ever before, putting in 40, 50, sometimes even 60 hours a week, yet somehow they still can't afford life. Paychecks disappear almost instantly. Rent keeps rising. Grocery bills feel out of control. Credit card debt is exploding. And even families earning what used to be considered good money are quietly admitting something shocking. They feel broke. Across the United States, a terrifying question is beginning to spread through the middle class. If working full-time no longer creates financial stability, then what happened to the American dream? For decades, Americans believed in one simple idea. Work hard, stay disciplined, build good credit, contribute to your 401k, pay taxes, and eventually life would become stable. You could buy a home, support a family, take vacations, and slowly build wealth over time. But today, that promise feels weaker than ever before. Millions of workers are realizing that full-time employment alone no longer guarantees security. In fact, many Americans now feel like they are running faster financially while falling further behind every single year. One of the biggest reasons behind this crisis is inflation. Over the last several years, the cost of living in America exploded across almost every area of life. Grocery prices surged. Gas became more expensive. Insurance costs climbed higher. Rent prices reached record levels in major cities. Healthcare became harder to afford. And after the Federal Reserve aggressively raised interest rates to fight inflation, borrowing money suddenly became far more expensive for ordinary people. Mortgage rates skyrocketed. Car payments increased. Credit card interest rates climbed above 20% for many Americans. Families suddenly found themselves trapped between rising prices and rising debt at the exact same time. What makes the situation even worse is that wages have not kept up with the real cost of living. Yes, some workers received raises, but those raises were nowhere near enough to match inflation itself. What begins as a foreign conflict overseas can quickly become an economic disaster inside American households. What makes this crisis even more dangerous is how interconnected the global economy has become. One military incident thousands of miles away can instantly trigger panic across financial markets worldwide. Oil traders react within seconds. Automated trading systems begin selling stocks. Financial news channels push non-stop fear-driven headlines. Consumers reduce spending. Businesses slow hiring. And before most people fully understand what's happening, recession fears begin spreading across the economy. America is entering this situation already financially exhausted from inflation, expensive housing, rising debt, and years of economic uncertainty. Another major global shock could push many families beyond their financial limits. Some economists are now warning about the possibility of stagflation, one of the most feared economic conditions in modern history. That's when inflation continues rising while economic growth slows down at the same time. In that environment, companies struggle to grow, layoffs increase, wages fail to keep up with prices, and consumers lose purchasing power rapidly. Younger Americans already struggling to afford homes or build savings could see their financial future delayed for years. Small businesses could face even more pressure as consumer spending weakens and operating costs rise. The fear is no longer just about war itself. The fear is about what another global crisis could do to an American economy that already feels fragile. At the same time, growing military tensions could also increase government spending dramatically. Historically, periods of international conflict often lead to massive defense spending, larger national debt, and rising long-term economic pressure. While defense contractors may profit, ordinary taxpayers often absorb the financial consequences through inflation, borrowing costs, and slower economic growth. At the same time, millions of Americans are quietly relying on debt just to survive everyday life. Credit card balances in the United States are sitting near record highs. People are no longer using credit cards for luxury purchases alone. Many are now using them for groceries, utility bills, rent, and emergency expenses. But once debt begins compounding faster than income grows, escaping financial pressure becomes incredibly difficult. Many households are entering financial survival mode without openly talking about it. Social media has made the emotional pressure even worse. Every day, Americans scroll through images of luxury vacations, expensive apartments, designer brands, and unrealistic lifestyles online. That constant comparison creates enormous pressure to appear successful even while privately struggling with debt and financial anxiety. Many workers now feel trapped between rising living costs and a culture that constantly encourages spending money they do not truly have. Meanwhile, corporations and wealthy investors often appear to be thriving, while ordinary workers struggle more than ever. The stock market reaches new highs, luxury spending remains strong in certain industries, and major companies continue generating billions in profits. But underneath those headlines, millions of ordinary Americans feel financially squeezed by a system that increasingly feels impossible to keep up with. That growing disconnect between Wall Street and Main Street is fueling frustration across the country. What makes this moment especially painful is that many Americans feel like they did everything correctly. They went to school, worked full-time jobs, paid taxes, tried building good credit, contributed to retirement accounts, and followed traditional financial advice.